in my trying to understand, so when I have a view and it doesn't happen, and I thought we'd be much higher in Bitcoin right now, given all of the things that I expected in terms of the expansion of kind of the network effects this year, we've seen stablecoin market cap go higher and Bitcoin's not going higher. Bitcoin's like the same price it was in December. To give you an idea of how little it's gone, we've got gold going higher. So we've had this year, we've got money supply growing. You've got everything that you would expect happening, including the stock market going higher. And Bitcoin has just not had the normal beta that it's had. In 2022, the equity market was down. So the one thing about the Bitcoin halving cycle, it seems to have been trading with traditional finance markets. So when you say that Bitcoin's 4-year cycle is going to play out next year, you're also embeddedly saying you don't believe in AI and you don't believe profit margins are coming and you don't believe the earnings are going to be higher and the S&P is going to go higher.
Bitcoin has stayed flat despite strong tailwinds, pushing Jordi Visser to challenge old cycle myths and see it as central to the next market shift. Jordi Visser explained that despite strong macro tailwinds in 2024 rising stablecoin market cap, money supply growth strong equities, and gold hitting new highs, Bitcoin has remained flat. He attributed this stagnation partly to whales selling ahead of the 4-year cycle narrative, much like seasonal patterns in traditional finance that lose effectiveness once too many people anticipate them. This perspective underpins his conviction in Bitcoin. Visser believes that once Bitcoin breaks through its all-time highs, it will erase the psychological weight of the 4-year cycle, just as equities invalidate resistance levels once surpassed. In his view, anchoring Bitcoin's value solely to halving cycles is misguided because it implicitly assumes weak profit margins, fading AI growth, and a weaker S&P. Instead, he positions Bitcoin alongside equities and risk assets that stand to benefit in a growth-driven environment rather than a fear-driven one. Another critical part of Visser's thesis is the geopolitical split between China and the US. He argued that China has effectively chosen gold as a backbone for the yuan, while the US has leaned towards stablecoins. This sets up two competing frameworks for capital flows. Once a deal between the two powers is struck, Visser sees Bitcoin emerging as the bridge between gold and stablecoins, acting as the neutral asset that ties together both old and new systems. In this role, Bitcoin becomes central to the evolving financial order rather than just a speculative asset bound by cycles. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspective. Thanks for watching.
All right. So two things you said there, which one of them is just like TradFi. So in my trying to understand, so when I have a view and it doesn't happen, and I thought we'd be much higher in Bitcoin right now, given all of the things that I expected in terms of the expansion of kind of the network effects this year, we've seen stablecoin market cap go higher and Bitcoin's not going higher. Bitcoin's like the same price it was in December. To give you an idea of how little it's gone, we've got gold going higher. So we've had this year, we've got money supply growing. You've got everything that you would expect happening, including the stock market going higher. And Bitcoin has just not had the normal beta that it's had. But the TradFi world always has this thing that it comes into beliefs, whether it's before presidential cycle. You'll see all these seasonals come out and people believe them. And seasonals work until they don't work. And if too many people are worried about the seasonals, what normally happens is they sell in front of it. And in September and early October, it was very clear to me and the people I was talking to in the space that there were a lot of whales / OGs, people that have made a lot of money that were selling, and it would kind of make sense in the 4-year cycle. But you said something very important. I just want to make sure people hear this. So my job in coming over from the traditional finance world as a macro person is to think about what I think the equity markets are going to do next year. So I believe that a lot of people think there's an AI bubble. There's not even a question. It's all day long. It's nonstop. I will continue to tell people, if you want to make the mistake of believing that AI is a bubble and then lose money, I don't give a crap. This year, for everyone who's bearish AI and thinks it's a bubble, the only thing that has saved them is one thing. I'm long gold. Mm-hmm. Give me gold. And that's been, if they're bearish AI, the thing that has saved them this year is to be long gold. So my gut tells me,
crazy uncle market.
Yeah, exactly. So my gut tells me the pain trade for next year is gold doesn't work and the AI doesn't bubble. And then everyone has to go pick something to buy. Mm-hmm. I thought that was going to happen this year, not with the gold part, because I think gold long-term is going to go higher. But a China-US deal is critical to this whole situation. So what has led me to believe is that I do believe people were selling Bitcoin ahead of the 4-year cycle. Great. So then the way I deal with everything in the traditional finance world, just like it was before, any period that people believe, if you take out the highs before that. So now 126 has been set in stone. The reason I'm buying Bitcoin is because I think when we get through the all-time highs again and basically get rid of this 4-year cycle belief, now there's no imaginary place for people to ever again care about. And that's normally what happens in equity markets. And oh, by the way, 2017 was the end of the Donald Trump. Well, we've had tariffs this year. We've had bad stuff happen this year. The equity market in 18 was bad. At one point, it was down 20% year to date in December. In 2022, the equity market was down. So the one thing about the Bitcoin halving cycle, it seems to have been trading with traditional finance markets. So when you say that Bitcoin's 4-year cycle is going to play out next year, you're also embeddedly saying you don't believe in AI and you don't believe profit margins are coming and you don't believe the earnings are going to be higher and the S&P is going to go higher. The one thing I want to remind people that I fully believe, and it's part of my Bitcoin thesis, China has decided that they will back their yuan in gold. So they're looking at gold in yuan terms. So they have reserves. On the US side, we've chosen stablecoins. These are the two kind of new worlds that are going on. China's not too happy about the stablecoin thing. Europe's not too happy about the stablecoin thing. This just means that the capital flow argument that all of these great historians have said is taking shape with the old framework of gold and the new framework of stablecoins. And this is why Bitcoin is going to be a major, major part once the deal is done, because then we've set the table between gold and stablecoins. If you're worried about a systemic issue, just like it was with the tariffs, I'm going to say this again and again. Unfortunately, we're in a situation where the economy has been financialized. If the stock market is allowed to fall, we will go into not a recession, we'll go into something much bigger, because the only thing keeping the economy up is the spending on the data centers and the spending by the high net worth individuals who own the stocks related to the data centers, plain and simple. And whether you don't have to like it, it is, I admit it, it's not a fair place right now. But innovation has caused the government to use their transfer mechanism, and mommy and daddy come out with money whenever they need it, especially in an election year. So to take what is happening in two small banks that has taken the stocks down somewhat, to worry about where Jeffrey's stock price is, to worry about where anything is on these things, I think you're underestimating what ends up happening once this goes through.
Jordi Visser emphasized that the future of Bitcoin depends heavily on a US-China deal, particularly around rare earths, which he sees as essential for a sustainable move higher. He explained that one of the biggest lessons he has learned this year is that the so-called 4-year cycle in Bitcoin has become more of a psychological bogeyman than a reliable pattern. While past peaks in 2017 and 2021 align with this cycle, he does not put much weight on just 2 data points. Instead of being cautious, Visser has taken the opposite approach, buying Bitcoin aggressively every day and even placing bids well below the market. In his view, the very panic surrounding cycles only reinforces his conviction to keep accumulating. Visser further argued that a trade deal would be a turning point, easing many of the fears that have defined markets this year. He described gold as a fear trade, while positioning Bitcoin on the other side of the spectrum, more aligned with equities. Looking ahead, he expects stocks to move higher, supported by accelerating AI innovation, which he believes most people are still underestimating. Let's get back to the interview.
I remember when Twitter first entered my world of like, wow, in the markets, you got to pay attention to this thing. Like you're getting news that isn't coming across my Bloomberg at the same time. Even if it's rumors, you're catching stuff. So here we are now. You fast forward, it's probably a decade later. And back then, and there's still some hedge funds that can't use Twitter, or at least banks and things like that. The panic just grows quickly, but it's this thing that has shocked me that you and I have gone through this year, which is if we laid back and said all of the panics that have occurred. And I said last week that, hey, you kind of at nighttime, I'm warning my son, like there's deer out there when it's dark. And
I mean, you nailed it. You were like 3 hours early.
So all that took was a tweet. AI bubble. People are, I mean, they're all over this AI bubble. And just so people hear this, there are always bubbles in the market. Just like Jim Cramer likes to go on TV, there's a bull market somewhere. If a market is going up, there's a bubble somewhere. So define a bubble as 0 revenue companies are trading at high valuations. So whether it's Oklo, whether it's Fermi, whether it's a lot of these energy names which don't have revenues right now, you can categorize those as bubbles. They're not the entire market. What dominates what happens in the market is nominal GDP, inflation, so you get back to real, and you get to a scenario where earnings follow nominal GDP. So everything is fine. But to get back to your point about Bitcoin, whenever this kind of situation happens that everyone's panicking, and it's something that should be expected, China and the US have to come to a deal. I'm going to say this again and again. Rare earth is the most critical factor in the world. It has been all year. We've watched tariffs be a fear. We've watched stagflation be a fear. We've watched inflation be a fear. I can't even remember everything that we've had to talk about here as fears. But now we have bubbles and we have credit risk, and the world's going to end. For Bitcoin to actually have a sustainable move higher, I learned a very valuable lesson this year. The boogeyman of the 4-year cycle, which you can tell me about, because I'm not smart enough to understand this whole, this is going to be a crash that happens. And I go back and look and I see, well, in 2017, right around this time period, it was the peak. 2021, oh, I get it. So that's 2 data points. I don't really live off 2 data points. And maybe there's one in 13. I didn't go back to look. It was still too new. But if you can tell me in front of everyone watching right now why I should be worried about the 4-year cycle, and then I'll give you a reason why I'm buying it aggressively every day right now.
So you're buying Bitcoin aggressively?
I'm buying Bitcoin all the way down to 100. I have bids under 100. I do think there's a connection. And the reason is when people do buy gold, there's no doubt that it's a fear trade. So this year, aside from the things I mentioned, the stagflation, the inflation, there's also been the government's going to default. So JGB yields have been very correlated to gold over the last 3 years, and they've just gone higher. And JGB 30-year yields are actually doing something interesting right now. I'm a big fan of when you get news that's supposed to continue a trend, and it actually be news that stops a trend. Right now, JGB 30-year yields have gone back down. They gapped higher, and everything kind of went in when the election situation went in. But now all of a sudden, it's gone back down. The China-US deal is far more important when it occurs. And I do believe it will occur, whether it's in November or whether it's in December. When it occurs, I think people have to sit back and take a look at what this agreement is going to mean. Because for this year, we've had a lot of problems. The Chinese export numbers came out over the weekend. They were up 8% year over year. The Chinese exports to the US we're down 27% year over year. This has never happened before. So this has been a year where China has been kind of redirecting flows. They haven't bought any soybeans. So on the import side, they haven't done it. This is a trade negotiation, which has left a lot of people kind of worrying about what's actually happening. There's a lot of businesses in this country that get stuff from China, and they can't get them right now without tariffs. And so you've had this kind of disconnect. A deal happens. This is a major event for the world because it basically is going to mean a lot of things that I think people have been worried about. And gold is a worry thing. So where Bitcoin fits in is people aren't worrying as much. Then Bitcoin goes with the other side, which is stocks. And that's why I'll say again, I believe stocks will be higher next year because the AI situation that people are going is not only accelerating, it's picking up a pace. And all of the tea leaves that I've read over the last 3 weeks in podcasts are people are not underestimating where we are in AI today. They're too focused on where it was in the past.
The broader picture is that markets are being pulled between fear-driven trades like gold and growth-driven opportunities in equities, with Bitcoin positioned somewhere in between. Much of the uncertainty this year has come from geopolitical tensions, trade disruptions, and recurring panic cycles, but the eventual resolution of a US-China deal could reset the landscape. If fear subsides, gold may lose momentum while Bitcoin and stocks benefit, particularly as AI continues to accelerate beyond expectations. In this environment, the 4-year Bitcoin cycle narrative may fade, giving way to a new framework shaped by capital flows, technological adoption, and shifting global alignments. If a US-China deal eases fears and AI growth accelerates, will Bitcoin act more like equities or carve its own role beside gold and stablecoins? So stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.